Good afternoon, traders. This is Christian Farmer, it's Trade Trade Group, and this is your end of day market recap for what is today. Today is Wednesday, January 15th. Big move today on the CPI report. That's kind of where I usually start these sessions when we've got a lot of economic reports or some heavy economic reports. So I will do that first. Risk disclaimer in front of you. Everything that we're going through is for information purposes only, not giving out any advice or recommendations. Please read the full risk disclaimer right there. So let's start with the driving news for today that caused the major gap up today, which was the CPI report. So comes in line with expectations. The X food and energy comes in 0.2. I don't think I have the core number in here, but a lot of people talking about the core CPI, which was a little bit lighter than expected. I don't know why Bloomberg, unless I'm missing it here, doesn't have it. But once again, we kind of talked about I've been talking about how the numbers were set really high. The PPI report yesterday, I'll just bring that up for you as well. So whoever's setting these expectations set them really high. They were expecting zero point 0.4 for the PPI, number comes in 0.2. Now the difference, which I want to go over with you guys, which we certainly talked about in the pre-market prep, we talked about it in the trading room, was the difference was the bonds today. Bonds had a huge move today, so I will bring that up for you. But overall, the market liked this number. And again, I don't have the core number, the core, because I know some people are talking about how that came in a little bit higher. I'm not, I'm not, I don't analyze these numbers enough. This is something else that I say a lot in these videos, that I'm not an economist who's digging into the components of core CPI versus the regular, month over month number. But it just kind of shows you too that in line, and the market just wanted to get this number out of the way. A couple of things before I even go into the TLT and what bonds did today. One thing that I had noted yesterday was that in terms of market dynamics, we started to see more a flip in terms of names that were going up versus going down. Now this chart is delayed by 1 day, but you can kind of see what I mean if you kind of squint here. I know this is tough to see a little bit, and because this chart is not the best, but you could see new highs actually outpaced new lows. New lows were absent yesterday. So that was a good thing. Like sometimes these little like divergences like that, where the way that I classified yesterday's price action was a bit of chutes and ladders. We had a good reaction to the PPI number. Then we sold off after the open. We regained some footing there, in the middle of the day, and then we fell lower again. So the market looked did not seem like it was on firm ground yesterday. But one of the things that was kind of the silver lining was that there was more advancers versus decliners, which kind of tells me that the market was gaining strength under the hood, right? And that's why we pay attention to market breadth and what's going on there. Today, you could see that we've got a further expansion of new highs. There was 134 new highs. That's 27% of the S&P made a 4-week new high today, and only 4% made a new low. So I think that's pretty good. And you could kind of go through some of these names as I did yesterday. It was a little bit easier because there wasn't that many. But you've got things, you've got a lot of where's my spread? I should have my spreadsheet up from earlier. Hold on one second. I'll bring that up for you. All right, there we go. So I put this out on Substack every day for free. You could pay. I just charge $20 a month if you want to see what my positions are and what my new trades are for the day. The part that you can't see is the watch list, which I'll show you guys today for free. But it's just $20 a month. That's it, and you could see what my open positions are, and I provide a chart on every new position that I get into, so that you can kind of see what I'm looking at. But here we go. Here's the market dynamic. So what do you notice here? You notice that so tech, which is 30% of the S&P, it's on here, but there's not that many names that made a new high today. There's a few. But what do you see? What are the other areas that you see that are dominating? Well, a couple sectors that we talked about this week. Industrials, a lot of industrials on the list today. Even though that's much smaller. Here, I'll show you this too, just so that you can kind of get a frame of reference in here. What do I want? SPX index, and then I think it's IMAP is the code here in Bloomberg. But you could see, I'm just going to sort this by weight. Tech is 32% of the S&P, and industrials is only about 8% of the S&P. That's it. But look at how many names in industrials are making new 4-week highs, right? There's something going, that it started to turn earlier in the week, but GEV, which is a name that I'm in. I did take some profits in that name right around the open, and it kind of was a little bit weak. You've got 3M, which is a name that I've been talking about on Twitter, GE, which is another name that I've been talking about on Twitter, and you've got some transports in here too. I see UNP, I see did I see Picar on here? There it is, Picar. So just kind of interesting. So I'm not going to go through all these charts, and then of course financials had a big expansion today in new 4-week highs. So this is the market that we're given right now. I know everybody likes software plays and they like all kinds of tech and small and growth, but I think that this market has changed somewhat, and I think it's going to be very interesting. Of course, with a bunch of banks out of the way, which had really good earnings, is it going to continue to be other areas, or is it going to return to tech? A lot of rotation that's been going on. So we don't know yet because we don't have the earnings yet for most of the tech companies. Tuesday, Netflix reports, which is they classify that as communications. The S&P does, but that basically remains to be seen. So let me just go over. We'll talk about the SPY chart in just a second. But here's your big pop on TLT. Notice this is something that we talked about in pre-market prep, which I do every morning at 8 o'clock with Dennis Dick and Joel as well. And we go through all the different moves. And I had talked about how this might be, you had some support in here, right? Now, of course, this was not the low that we've seen, but we bounced on support. We had no confirmation, but again, the market's really moving on these economic reports recently. So that causes a big move back. Does it mean that bonds are off to the races? No, it doesn't. You've got to watch this resistance here at 87, but at least it takes the pressure off a little bit, right? And if you want the actual bond yields, remember, I was going over this in the trading room, just so that when you look at bond yields, right, it's the opposite of bond prices. Right. So for example, TLT goes up, that means rates are going down, right? That's just how a bond works. Oops, I got the wrong screen up. Here's bond prices or yields, just so that you can kind of see what they did across the curve, because that's always interesting to look at. But for instance, the 2-year yield went down 10 basis points today. The 10-year yield went down 14 basis points. So again, it takes that pressure. Everybody's been looking at bonds and saying, oh my God, yields are not good, yada, yada, yada. So it does take some pressure off the market, right? But it doesn't mean that you're going to see all growth stocks go up. So let's look at the index charts really quick. We're still in this pattern for now. And I guess I could draw a trend line, but I'm not going to do it. Yesterday we got a short-term rejection there at the 5-period moving average. We couldn't get over that. Today we jumped over that, and now we're fighting through overhead supply a little bit, overhead resistance. We did get into the value area, so here's the level to watch. So whenever I talk about these levels, by the way, these are levels for you to kind of make, at least not for you because I'm not giving out any advice, but these are levels for me to say, hey, I'm looking for confirmation when I look at the charts. I use Hindenburg's research. Anderson says to disband firm. Okay, that's a headline that's out. So I look for levels where I could trade against, and I look for confirmation. Right, this value area is looking at all of the price and volume action from last month. And this becomes significant if we could stay inside value, and 590.30 would be the level. Also, notice how that lines up with the 50-day moving average, right? A lot of people were referencing that. Now, just like yesterday, we rose up to the 5-period moving average and got rejected. Today, we couldn't get over the 50. So you just kind of have to understand that there is that short term. Again, I say short term, it's important, right? Because it doesn't, like tomorrow, we could possibly get over this. By the way, tomorrow, I just want to make sure you saw this, but tomorrow we do have more economic reports that are coming out. We have retail sales, and they're looking for a decent number. They're looking for 0.6, right? But again, who knows how they're recovering. I wanted to come back to retail in a second, but I wanted to make sure that that was on your radar for tomorrow. But there you are, 590.13 is the level to watch in the 50-day moving average. Qs, again, these are big moves, by the way. The Qs were up 2.3%. So really nice move if you were long. And like I know this kind of is a little bit frustrating for those who are just day trading because you're not going to get these opportunities, especially when you have economics or something other that comes out, right? I've always said that it's very difficult to be a day trader because the majority of the moves happen in the overnight market, right? It is a much I don't want to go off tangent here, but you could Google this, right? Take a look at the percentage gains in the overnight market versus in the regular market, and they are astronomically different. So, for instance, if you buy if you were to do this over the last 20 years, if you were to buy the close and sell the open versus the other way around, try to buy the open and sell the close, right? You would be up something, I think it's like something ridiculous, like up 700% versus up like 25%. So again, those are not exact numbers. Please Google it and you can find all the studies. You could probably find about 5 or 10 different studies talking about buying the close and selling the open. That is the way that the majority of the money is made. It's made in the overnight market, right? I know that's very counterintuitive to some newer traders. They think they can come in and they're gonna put all these trades on and so forth during the middle of the day. It's a lot harder to do that. You have to get, in my opinion, conditioned to holding through the close. Now, I know that's scary because people don't have control and you don't know what the news is going to be. But over time, and again, I'm not talking about one particular day, but over time, that's how money is made, is that you have to hold positions, right? To make the majority of the money. I'm not saying anything. I'm not saying anything that about anybody's skill level as a day trader. You can make money as a day trader, but that's not where the majority of just overall market gains. It is what it is. Right. And that's like a 20, 30-year relationship. You could find that study about buying the close and selling the open. So big gain, but the majority of it happening, in the overnight market because of the CPI report. Now, what to watch here after this big gain today, right? I would watch. Now, this did get over the 50-day moving average, and we'll just see if we can make some progress here. But we're not out of the woods in terms of like a technical picture because this is still, here's your high, here's your higher low. Here's your higher low, but we haven't gotten rejected or anything yet here today because we came from such a beaten up level. So we'll have to see if we get some follow through. All right. IWM, which I have said this until I'm blue in the face, that IWM loves to move on economic reports. Case in point, look at all the gaps in this chart. Here's a big gap. All these gaps are usually are usually some type of economic, or in this case, this was an election, huge gap here. Big move on Fed Day, obviously, all of these things really drive, but the CPI report, jobs report, IWM loves to fly in the overnight market. Sometimes it's not always up, and it can be down, but the last 2 days, this is where we came from. Somebody asked me on Twitter, they're like, "Hey, in your chart the other day, you had bearish 80% rule." Yeah, so the way that the 80% rule is, so again, like you have to take this with a little bit of a grain of salt and say, and notice like for instance how inconsistent IWM is. So would I be looking? So what the 80% rule says is that if you start, you could just look at the value area um, for the year, right? We started the period above the value area. If we break into this value area, there's an 80% chance, right? And by the way, you need a closing bar, right? So people love to jump on these things. You got to give them a little time to settle in. So if this bar closed, and it hasn't yet because this is a weekly bar, so you have to wait till Friday, and if it closes inside value, it will trigger something that's called the bearish 80% rule, looking for a move to one side to the other. All right. But uh, you know would I be playing that? Like, even though that's what the rule is, you do have to use a little bit of your senses with this because IWM is really sideways. So I would not really be looking to play 80% rules. I would be looking for something a little bit more consistent. But that's just me. Now you have a bullish 80% rule here too. Would I be playing the 80% rule in small caps? No, I wouldn't because they just don't, unless there's another economic report out. It's too difficult. Right? You got to always even though like my indicator says that because that's what the rule is, I won't be playing this because um IWM is too inconsistent for me, right? And it's too trendless for me. So, if you gotta go to where things are easiest, in my opinion, not hardest. And IWM is hardest. All right. What I wanted to cover a few other things too. Let's talk a little bit about the financials. So that's the indices. Let's take a look at what some of these charts are telling us. So let's go through a couple of the names that reported today. So here's XLF, which did get back above its 50-day moving average. So maybe a false breakdown here. Notice on the lows, by the way, that the RSI did not so the price action made a new low, but the RSI did not, right? So that's a bullish divergence there. So that's not bad. JP Morgan, I think, had great earnings. It had it JP Morgan's typically difficult on earnings. Look at how much it moved today. 2%. That's the average that like JP Morgan moves on earnings. It doesn't really do much more than that. Right. And we could look at the history, which is always a good guide, but take a look. When's the last time that JP Morgan has moved 3% or over 3%? Actually, there is one in here. It moved up 4.5%. It also moved up, it went down 6.5%. So there's a couple outliers in here where it does move. But overall, I like the trend here. And I think JP Morgan's kind of been bottled up for a bit and very strong. Also, look at the other reports. Really nice move by Wells Fargo, up 6.7%. Citigroup, which I always feel like the expectations are the lowest for, had a real nice move today, up 6.5%. Goldman, right? So this is kind of the one of the we've had some earnings reports because earnings season is now almost continuous, but we've had a lot of we've had some earnings reports that have come out, but this is really good. Now, it's not to say that all the earnings reports are going to be good. What I generally do for earnings season is compile a earnings list, earnings gap list, earnings strength list, and I typically will watch these names because they have a good chance to be your market leaders. All right. Somebody asked me as well. I'm just going to go uh, uh, off script a little bit because somebody asked me about FTAI on Twitter, right? So there was a short report that was issued by, I think it was Hindenburg, but they asked me like what I think of it, I guess, or I really don't know. The way that I trade is I follow trends. Um, Muddy Waters, so not Hindenburg, but Muddy Waters short report. I didn't have a chance to read the report, but they have a short view on it. Again, today was a very busy day. I'm managing a lot of positions, so I just didn't get a chance. I don't own this in my trading account, but I do have a position in the TTG trend portfolio. I'll have to go through it and see if there's any validity to it. But if I had this in my trading account, I would be out of it, right? That's why you have stop prices, right? And that's the best thing I could tell you. There's anything there, any stock that I own or anyone owns for that matter, there could be bad news that comes out and crushes the stock. It's why you have a stop price, right? And why you don't stay married to any position. Case in point, and the reason why I brought this name up right now, now this did take out a VPOC, so maybe watch the I would watch as well from a technical standpoint and watch what this does at its 200-day moving average. So that's something that I would watch. I would also watch that bottom of the value area too, which is 124.20, but it did rebound. I mean, this thing went all the way down to $92 and closed at 116. So as bad as it is, down 24%. It was down much more than that intraday. But case in point, right? Tesla saw a boatload of call activity in the beginning of the day yesterday. Look at what it did yesterday, right? It got hammered at the end of the day. And I sold half my position. I had bought a little bit around the open yesterday. I had added a little bit more, I think, in here. And you know, it was holding its own, and I was like, okay, that's fine. But it really got slammed at the end of the day, and I sold half my position, right? So you know, I don't know, like, you know, we don't know what's going to happen on a given day, right? So I reduced my position back to a starter position right at the end of the day. Now, again, I basically put on a starter here in the beginning of the day. Where's do 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 do. Right. This is, by the way, like I added a decent amount of trades yesterday. Here, so 10 o'clock, right? 4:14. I added a starter position because we saw a lot of call activity on the tape yesterday. I added to it later in the day, added to starter. So I kind of legged into a little bit there at 409. But you can see my stop price, you know, it was 403. It broke that, right? So I reduced it back, you know, to a position that I felt comfortable with, right? And then luckily today it worked out. But if you don't have these things, if you don't have these risk parameters, like at the end of the day, I say this all the time, we're risk managers, right? As much as like we're traders and everything else, you have to be a risk manager. So that's all the info. So I wish I could give people more information on FTAI, but you know, I have to go through and read the report. Here's what Tesla did today. So it did get over the, you know, just barely, by the way, because again, it's so funny. I see people doing a lot of victory laps about Tesla, but you know, it just, I don't want to say just barely, but it did, you know, here's where all the call activity happened, right in here. So if you bought calls on this like around the open yesterday, I don't think you really made any much money on it because of the decay on it. But if you bought stock on it and you kind of averaged in, you probably fared a little bit better. For now, I'm long, and I'll try to stay long versus this 402 level. That's where that level basically came from, is the bottom of the value area. So this is also flashing bullish 80% roll, and that's what I'm trying to play for this name. Let's talk about crude. All right. So crude had another, you know, hell of a day today. It actually broke through its value area for the year, right? And I've been positioning in energy stocks because number one, I think that they're underowned, and I still think even after the move, even though they're the best performer year to date, I still think energy stocks are still underowned. So you know, I went through a bunch of charts yesterday. You could see I did take some targets in some of these things. Um, EXE was one name that I put on. I did not get a target in ET, but that's okay. I think the trend looks fine. Right? Did make a nice move, so I'll look for for some follow through there. But EXE made a new high today. EQT, which is the name of the TTG trend portfolio, really nice move. Um, LNG, you know, attacked on more gains from yesterday's big green candle. AR saw some call activity. So yeah, these names are up a little bit. But what I would do, I may have done this in yesterday's video too, but zoom out, right? Look at, you know, look at where some of these names were, right? So yes, if you zoom in and you're looking at the price action very closely, you're like, hey, that's a big move. And it is a big move, right? From like 30, you know, 33 bucks to about 40. This thing digests a little bit, you know, and a lot of these names are going to have to get through earnings, but you know, I did think very, very strong. A couple other names too. HWM was a name that I got long the other day. Was able to take another target in this one. Planet Fitness also had a nice move higher. A couple of names that I'm not in that have been acting really well is Wix. And look at the volume in Wix, right? Really nice break higher. Then a lot of other names that I was watching today kind of struggled. Like they had a nice move in the first couple hours, but look at Reddit. Right? Reddit, I thought might make that move today, and I don't like that candle. It's not to say that there's anything really wrong with it, but it basically finished where it opened for the day. So not that strong. Another name that I was looking, because again, I don't, my hunch is that we're going to see more of the energy and financials and industrials continue to outperform for a bit. But I'm also going to watch the best in breed in terms of, you know, what some of the software names are. And it's the same, it's a very similar looking candle for AppLovin, which has been another star, right? I was also watching a little bit of Palantir, which has been beaten up. That's Planet. Whoops, wrong one. Palantir. Right? It's okay. It's coming back a little bit. It's not a nice day today, up 3.4%, so that's nothing to sneeze at. But I just think there's a lot of technical damage being done here. The quantum names had a huge day. Let's see, where did IONQ finish today? Very interesting. We covered this in pre-market prep, but huge day for INOQ. So nice move there. Lunar, by the way, I know I see people are mad at me because, hey, listen, I just tweeted out and by the way, this closed nicely today. I tweeted this out as I get the information, right? By the way, like I'll say this again. I'm not trying on a such a good day. I'm not trying to be negative, but this is the headline that I got earlier. They were awarded a $4.2 billion contract. They corrected the headline. This happens. I can't. There's nothing really I can do about it. But this is Intuitive Machines among 4 firms awarded NASA contract. The best thing that I could tell you guys to do if you're trying to trade off of Twitter, I don't. I'm rubbing my face because you have to spend a little bit of money to make money, right? So, and I'm not saying that you should be in my trading room, but if you're trying to get signals off of Twitter, I think that's very hard to do, unless you're looking for ideas and then you can run with them. But if you're trading off of news or something like that, I don't know. So in any event, a really nice day of trading. We're now at the midpoint of January. So, as always, my goal is to outperform. Just looking at some of these numbers and where we are, look at the mid caps. By the way, and I was looking at this chart, closed right at the 50-day moving average. So really nice move the last couple days. And now your mid caps are leading the major indices, but you're going to have to deal with some overhead supply here, right? So I would not personally, I would not get complacent, right? Even though we've had a couple real nice days of rally, I would still be a risk manager and, gravitate towards the to the relative strength. One other chart that I was going to bring up that I was impressed with today is Bitcoin. Here's Bitcoin futures, right? So they've got some work to do too. They've got to get out of the pattern of lower highs, right? So again, no rejection here today. This would be a reject. This is a rejection. This is a rejection. But let's see if this can get back above the value area for the week and get out of the pattern of lower highs. I'll leave it there for today. Really nice day of trading. Good to be outperforming for the month, and we'll see what retail sales and what the market has for us tomorrow. Have a great night, everybody. See you tomorrow.